What an eventful week we've had. We've seen that crypto completely tanked. There's things going on in the stock market that need to be addressed, and we need to discuss where this market is headed. Is it time to buy the dip like everybody is telling you? Because last time they told you to buy the dip, if you'll recall, the market just kept on dipping. So before you jump in blind and just start buying the dip, I think it's time we have a little talk. So that's exactly what we're going to do today. We're going to be discussing exactly why the crypto market tanked. No, it's not because of Elon Musk, even though maybe he helped accelerate it quite a bit. But we're going to talk about that. We're going to be talking about the stock market. We're going to be talking about what you should be buying or what you shouldn't be buying. Should you be buying options? Should you be buying leaps? Everybody has an opinion, but what should you do? What is best for you? So that's what we're going to be talking about today. This is definitely a video that you're not going to want to miss. So stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to yet another video. We've got a whole lot to talk about today, so I'm going to get right to it. But before I do, I ask that you please go ahead and smash that like button, as it greatly helps out this channel. So I thought that we'd start this out by talking about the Fed. Well, more specifically, the Fed minutes. So last year, Jerome Powell was my hero, but not only my hero, he was everybody's hero. If you were investing in the stock market, then Jerome Powell was like your daddy, pretty much. He was holding the market up pretty much single-handedly through QE, or quantitative easing, which means essentially that the Fed is dumping money into the market. Now, this was done through the purchase of treasury bonds. It was done through the purchase of mortgage bonds. And that's what the Fed's been doing this entire time, spending a total of about $120 billion every single month. Now, this is pretty big, but what's going to happen when that stops? Well, one thing to note here is that it's not just going to stop cold turkey. The Fed is going to start tapering down, and we've already been hearing rumors of this, and I think that the market is starting to price it in, or has already started to price it in, which is why we see tech stocks and growth stocks just destroyed pretty much. Now, talks of tapering, historically, they've been a sensitive topic for investors. And the last time that we've seen this or had to deal with it was back in 2013 under Fed Ben Bernanke, when the simple suggestion of a reduction in bond purchases sent panic into global bond markets and sent the 10-year yield rising around 1.4% in just a span of 4 months. So during the Fed minutes, the Fed signaled a shift away from its easy money pandemic policies. One of the participants said evidence of mounting inflation and a robust economic recovery could lead to an earlier review of near zero interest rates and its massive bond buying program. Another participant was quoted as saying, "If the economy continued to make progress toward the committee's goals, it might be appropriate at some point at upcoming meetings to begin discussing a plan for adjusting the pace of asset purchases." So, in other words, they're wanting to have the talk. But how soon can we expect this talk to take place? To get a better understanding of when this might take place, we look no further than Twitter, where economist and Fed advisor Diane Swank tweets, "Agreed. The beginning of a tapering talk. What is your over and under on how long before more concrete discussion? I am thinking Jackson Hole speech by @Federal Reserve Powell is a natural place to signal a shift." And if you want to read the comment from the guy that's responding to her, he says, "This in fact is very soft guidance, but it is most definitely the start of the runway the Fed said it would give us." Now, remember, the Fed said that they would give us plenty of notice before it started considering doing any type of tapering or discontinuing QE. But there are other concerns. So for several months now, the Fed has been saying that when we do get inflation, it'll be transitory. So in other words, just temporary. This is what's allowed them to pretty much continue their quantitative easing and allowing them to maintain easy money policies until the labor market recovers, or at least that's what they say. But now they're using words like unwelcome inflation and pretty much acknowledging that there is much higher inflation, and even indicating or signaling that they're willing to do something about it, like these talks that they're going to have. So what do you think? Is it time for us to start selling and pretty much run for the woods screaming? Or is it time to buy? Well, according to Cathie Wood, the US is setting up for a massive period of deflation. She says there's 3 sources of deflation, the first being a cyclical deflation. So here's how that works. Businesses are pretty much way behind the consumers when it comes to buying. Consumers have been buying all of these goods because they've been stuck at home. So we've had disproportionate amount of consumers that were buying goods last year. And the businesses are lagging in terms of capital spending, inventory, pretty much dragging their feet and getting even further behind. So this led to them having to double, triple, and even quadruple order simply because they just couldn't get these goods. Now, the first source of deflation that I just mentioned will come when all of these orders are essentially canceled. So we saw lumber correct 30% in just the last week, and Cathie Wood thinks that this is just the beginning of that. She believes that copper is starting to correct right now, and she believes that commodity prices just simply went too far, too fast, because these businesses were scrambling and panicking because they were losing business to their competitors if they didn't plan their inventories correctly. She also said that because of the vaccines rolling out, consumers are switching over from goods and gravitating more towards services because now they're not stuck at home all the time. So the sell-off of the double and triple orders will soon start taking off, and this great deflation will really get a kickstart. And the last type of inflation is technologically enabled inflation. So when we see DNA sequencing pretty much dropping 40% for every cumulative doubling in genome sequence, or AI training costs dropping up to 50% per year, these will be the massive deflationary forces that are going to hit every part of the economy, and AI is going to be everywhere. That's what she refers to as the good deflation. So what does this tell us? Well, if you believe Cathie Wood, then you should be looking for quality companies that are investing in the future, in future technology, companies that are investing in innovation, not companies that are aiming to please their shareholders. Now, another thing to keep in mind is this: even if you don't necessarily agree with Cathie Wood, one thing is consistent among many different narratives, and that specifically would be that you should be looking for stocks that are cheap. By cheap, I don't mean looking for stocks that are penny stocks. By cheap, I mean undervalued. So what exactly does that mean, and how do you find out if a stock is undervalued? There are several different methods, but one method would be to look for the book value per share on a company's balance sheet or a stock website. Ratios under a 1 are undervalued. Stay away from any stocks that have a share price that is not supported by its price to earnings ratio or PE ratio, and you should always compare several related companies and look for solid companies that have the lowest PE ratios. Now, I know that for some of you this may be a little confusing, especially if you're brand new to the market, so I do plan on making a very quick, very short video on how to do that, on how to look at a stock and figure out if it's undervalued or overvalued, so be on the lookout for that. I also plan on making a more detailed video talking about quantitative easing, so if that is something that you're interested in, be on the lookout for that too. But I think we're almost ready to wrap this part of the video up and get into talking about cryptocurrencies. But before we do that, I want to tell you about my take on the stock market right now, where I see it going, and kind of how I'm doing things. So earlier in the video, we talked about the Fed minutes, we talked about tapering fears, we talked about inflation fears, and in addition to that, we talked about deflation. So what does all this mean? Well, it means that there's uncertainty in the market. Do I really think that the inflation being temporary, like Powell says, if that's the case? Do I really think it's going to have a big effect on the stock market? Well, temporarily, yes, maybe because of fear and panic. But remember, any type of reaction, the initial reaction that you see out of the market is usually an overreaction. And that doesn't matter if it's to the upside or downside, it's usually an overreaction. There's panic buying and there's panic selling. It can go either way. So with that being said, I don't think that temporary inflation will make a huge difference, but I do think if we do see this panic sell-off, it may take a while for the market to recover. And I'm saying that basing it off of what happened in 2013. Keep in mind that we've already probably seen some of this sell-off because the market is forward-looking. The way that it happened in 2013, some of the circumstances were a little different. We can't base it exactly off of what happened in 2013, but what we can definitely see is that there's going to be a lot of uncertainty. There's a lot of uncertainty right now. And anytime you have uncertainty in the market is simply not predictable. It's not going to choose a side. There's simply a lot of volatility. It can go either way at any time. So with that being said, when we're talking about options contracts, I mentioned those at the very beginning of the video. You don't want to be buying options contracts during a time like this because the premium will simply get destroyed. The market's going to be going one way 1 minute and then move towards the other direction the next minute. Anytime that happens, you're basically killing, or the premium on the options is just destroyed. So you're not able to win either way. I mean, there are circumstances where you can win, don't get me wrong, but for the most part, even if you were going both ways, you know, puts and calls, it's going to be pretty tough, and those contracts are losing premium. So you have to time it just right, and to time it just right is pretty difficult. But what about leaps? Well, leaps are a different story, but you do have to keep in mind that if the premium on those leaps is expensive, I would probably wait a little bit or maybe go for a debit spread or something like that, because we don't know if this market's going to come down lower, and it's very possible that it will. But if you are somebody that doesn't mind holding while your contract is down, and you've got diamond hands, meaning you're not going to sell off and take a loss, then, you know, you can certainly feel free to jump into some leaps, but you just better make sure that you can handle volatility. You better make sure that you've got those diamond hands and expect to be down a lot, because at some point you probably will be down a lot. Other than that, I would just say nibble at the market anytime that one of your high conviction stocks is down. So rather than putting all of your money in at once, you're going to want to keep some money on the sideline, because you never know what kind of deals we're going to get. And you want to be ready for those deals, because that's where your wealth is going to be made. All right, so now we can talk about crypto. Massive, massive bull run in crypto. We see that all sorts of new people are getting involved. New retail traders. We see celebrities. Overall, we see adoption taking place. We see a lot more people adopting crypto and a lot of extra interest in crypto. And we saw that bull market just taking off until it fell off of a cliff. Long story short, guys, I pretty much expect this to keep going on. I even expect Bitcoin and the rest of the cryptos to possibly hit some new lows. I know we're going to hit a lot of volatility, but let me explain to you why. So we saw a crash because right now there are a lot of haters out there. There's also a lot of manipulation out there. So we've got regulations by the government, and not just our government, or I'm sorry, I don't know where you're from, but not just the US government, which is where I'm from, but we're seeing China and other countries also hate on Bitcoin and cryptocurrencies. Also, the US is trying to figure out how they're going to tax crypto, so there's still a lot of uncertainty. We see a lot of organized institutional manipulation because, you know, they got to get their money. Then there's the worries about the Bitcoin miners. Supposedly they're responsible for 6/10 of the percent of global energy consumption. While crypto bulls are trying to call this an opportunity to make crypto a leader in renewable energy, I'm afraid that not everybody feels the same way. And of course, we can't forget the leverage that took the entire market down on Wednesday. This was huge, and which is why we saw such a pretty big drop. And I mean, it was a crash. And last but not least, well, there's Elon. So a lot of people were saying that Elon is responsible for the crash. In a way, he kind of was a little bit, but not really. He just accelerated it, like I said at the beginning of the video. And he did so because, you know, based on what Elon did, or what Tesla did, accepting Bitcoin and then kind of retracting that and pumping Dogecoin, well, you know, that's going to have some negative consequences. But overall, guys, I'm pretty bullish on Bitcoin. That's not to say that it won't go lower. And by the way, when I say Bitcoin, I do mean I'm bullish on crypto, not just Bitcoin. But I think if you're trying to be super safe, you should go with Bitcoin and Ethereum. There are other ones that I like out there, such as ADA. And of course, you know, the more speculative, the way more speculative alts, such as SafeMoon and now even Doge. Now, keep in mind, we have been seeing a lot of volatility with this lately, and this is just the way that cryptos work. You can see them going a lot lower than where they're at now, but you know, that's normal, like I said. So what can you do to kind of protect yourself? Well, you know, don't put all of your money into it at one time. Diversify and you know, use common sense pretty much. But overall, in the long term, I think you're, you know, betting on something that's going to be a winner. Anyhow, guys, that's all I got for you in this video. I've got more videos coming up very soon, but make sure you smash that like button for me because it really helps support this channel. You have no idea. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.